All right. Oh, man. Excuse me, excuse me. What's good, Lamont? What's good? Who else is here with us? Who else is in the building? Lamont, can you do a sound check real quick since you're first? Or one of the first ones? That would be much appreciated. What the fuck? It's good, Nicholas. Appreciate the sound check. Thank you, thank you. It was good, Mia. Oh, Lamont, welcome to Tier 2 membership. Very nice, very nice. Speaking of memberships, I will be posting up some markups later for you guys to take a look at. Utilize some of the perks of membership only posts and stuff like that. And again, soon I will do community or not community, membership only videos. So you'll get some of those soon as well. So what is on the table for this afternoon? Honestly, I think today is done. So I'm going to lead with that. My team earlier was watching this. Actually, it panned out really, really well. I didn't send it till later, but let me walk you through this morning and let me tell you why I didn't trade today. Okay. And Sean's going to have a membership on Friday. Very nice. What's good, Roosevelt? FX. So, like I was saying, if you start on a 15-minute with where we reacted this morning, okay? Let me just double check. Yeah, okay. Just got to make sure my risk disclaimers are up there. Anyway, so this right here, okay, where when we came up into that and then we sold off, and at 9:30 Central, we made that new low. Okay, I figured we may run for these lows or even this one down here. And I needed to figure out an entry, okay? Let me come back to this for just a minute. I could have sworn it was the 15-minute. All right, maybe it looked different from what I remember. Anyway, I basically looked at this like an imbalance afterwards, right? So I figured, okay, that's gonna be our high. Now, why would this be our high? Why do you think? What's good, Andreas? Baltimore, Maryland's in the house as well. Welcome, Moneybag. Justin. Very nice, very nice. Why do you think this would be the high? One of them at least. Why do you think? Before we get into the fun stuff, why do you think this would be the high? Now, again, I neglected trading this only because we made equal lows and I thought we'd come up there to enter, but we ran the lows. So I went ahead and canceled it and just stuck with the decision. So Nicholas says after this high, there is a break of structure. That's part of it. That's part of it. Okay. So remember that this up here is a 15-minute imbalance, right? But what else do you notice though? Why would this be the high at 9 o'clock? Why would this one? Why would that be the high? What's good, Allie? Look at the two highs up here. Look at the highs up here. Is there anything that is important about that? I'll give you guys a minute. I've had this bucket hat actually. I ordered the wrong one. I've had the small to medium one, and so it barely sits on my head. And I wear it when I'm outside so the sun doesn't get my eyes. It's really good for that. So I ordered the large one, which is this one. I got it in yesterday or the day before. I got some books too. I keep telling you guys like I'm gonna stop buying books, and I keep buying more. So you know how that goes. Let me just refresh this real quick. Ran liquidity. So there you go, Nicholas. The right one is higher. Yes, that's what I was looking for. That's what I was looking for. So study this right here. Okay. When I point out things to you guys, it's for you to go, okay, why is this important? You have multiple things on this screen right here, but look at it. Okay. How can we trust that this 9 o'clock high should be the high, at least of the morning? It may not be of the day, in which it is right now, but in the short term, should that be a short-term high? I think it should be, because of what I just told you. 15-minute imbalance. The high to the right is slightly higher. Then we got our break of structure. But on the way lower, you already see it. We left this gap right here. And I love those. I love gaps like this. Yeah, more so on the S&P, but the S&P was a little bit different today. It didn't do this. It did something different. But either way, when there is a high that's been set, it's a fractal high too. Okay. Fractal high, 15-minute imbalance. The high on the right is higher. So we basically ran up twice. Okay. Then we left this gap. So what do you think the trade was? Or at least the original idea. I canceled it. I ended up taking it on like paper, but not as a real account. So essentially I didn't trade it. Okay. There's some transparency for you. But what do you think the trade idea was? Well, just like I mentioned a moment ago, the current low is right in there on the way up. So the next low, like to me, would be that 33,838, and then London's low, which is here. So that was initially the target. Now I told my team on the way down 33,800, because that's just a simple 800 level below the most recent low. Okay. So the market comes up, and as soon as it comes up into that, like as soon as on the way up, that's usually when I short it. Okay. On the way up. Boom. It fucking gets massacred. Now I did trade above that a little bit, which was a little concerning. I figured like, oh, I might be wrong on that. But again, it wasn't a live trade, so it wouldn't have mattered if I was wrong or right, because I'm not in a live trade on that. So I just let it go. But the stop was at this high, and price never came back up there. Never, not even close. I mean, it's somewhat close, but not to that exact high, or even 33,400. Doesn't get there. Doesn't get there. It straight gets demolished. Demolished. Okay? But let me tell you why though, because this is when, like, this discipline is required, okay? But for those of you that do come on here and take notes, let me tell you why I neglected not to short this, even though this would have been spectacular, of course. But we're in hindsight right now. Okay, I have screenshots, which again I showed my team. You guys saw me screenshot it here, and then at a new low, and then at a new low, because I was showing you what it looks like when you take partials. But yeah, we would have been shorting very close to the high of the day, but let me tell you why I did not. Okay, if we look at, I think it was the S&P. Okay. Oh, and that panned out yesterday too. Remember we took screenshots here. I ended up saying that, you know, I'm not looking for shorts anymore. But we had alerts down here because we were looking for a run below that, and we fucking got that. So there's a little update for you yesterday. Beautiful. It just, the timing was really weird, but either way. It was at the time that the Dow was in here. I think the S&P, you see how we didn't run higher on the S&P? I think it's right here. 840 to 9. Let me just double check that real quick. 835 to 9. All right. Well, 840 is the high, but if we use the 835 high, the S&P never made a higher high at 9 o'clock. It didn't do that. It was too weak to do so. So that also signifies that that's going to be the high, because there's your divergence. There's your manipulation. Dow trading higher, S&P trading lower. NASDAQ was also lower, unable to trade above this high. So that was weakness on S&P, weakness on NASDAQ, manipulation on Dow. So how do you know where to put your stops? Fuck. I just answered that. You know what I mean? I just answered that. Now, again, not financial advice, not a financial advisor, but I'm just saying when I place my stops, that's why I place them here or a little bit lesser if I'm trying to frame, like if I'm trying to tighten the stop a little bit. But generally speaking, the distribution high, the one that manipulates price, almost never comes back to that. Until a later time, of course, but on an intraday basis, look at that. That would have been beautiful. So an entry at the gap, a stop at this high. The equal lows there's about a 1 to 2.5, so not quite a 1 to 3. London's low, 1 to 2.9, and then like I told my team, 33,800. That's a little over a 1 to 3. Okay, if you partialed out, just in case we run for the rest of the day, like today, right now it's sitting at about a 1 to 6. So, and again, for those of you that are watching, it's not to say you would have held the entire position all the way down to a 1 to 6. That's not what I'm saying. I'm just saying, given risk reward on where it is now, if you had on a partial, it is now 6 times further than what you originally would have risked on that particular setup. Okay. Now, I didn't take this because why? The Dow was trading higher, and I think it was the S&P made a new low, the NASDAQ made a new low, but the Dow was higher, at least in the short term. So in the short term, Dow was our strongest index. And so given the rules in that video that I put out recently, the top 10 smart money trading rules, I wouldn't want to short the strongest index. In this case, Dow was the strongest. Okay, look at this retracement here. From this high to this low, and then this retracement, right? That's about 50%, maybe slightly over. The NASDAQ, not even 50%. The Dow, that's a deep retracement. That's easily a 786 from this high. See what I'm saying? 618 is here, the gap's just above that, and then that 786 is up here. So the Dow had a lot deeper retracement. So again, would this have been a banger trade? Absolutely. This would have been phenomenal to short that. Very little time in drawdown, run straight for TP. There's no fucking up candles in here, maybe one or two. But ultimately, it's just straight lower, 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 lower. But rules are rules, man. Rules are rules. So sometimes will your rules keep you out of a good trade? Yeah. Yeah. That's how it is. But hopefully sticking to your rules will also keep you out of bad trades as well. And the idea is that it'll keep you out of bad trades more so than keeping you out of good trades. Okay. So you can't look at it like, oh, well, damn, you know, we missed out. Well, by definition, we did, but it's better to miss out in the short term to potentially keep a trading career going. You know what I'm saying? So if you guys understand what I'm explaining to you, drop a like on the video. Let me know that you're paying attention. Let me know that you're getting some value out of our little discussion today here in the first 15 minutes or 16 minutes of the stream. Played the initial imbalance fill and the second one took me out. Yeah, exactly. Exactly, Omar. That's what I'm saying. I see what you're talking about right here too. Because I looked at that as well. But now you know why. Now, the bodies respected the imbalance on a 5-minute, but the wicks is what ran up there to manipulate. So if you shorted that imbalance, guess what? Yeah, you got stopped out. But just like I explained, it offered a chance to get back in. And then you could have got your loss back and then walked away. But why wouldn't this be a short? For the same reason I just explained it to you. The Dow was our leader. We don't want to short the leader because that it does shit like that. Where the market might be bearish, but it's going to stop people out or get them to buy that and then rip it lower. So you don't want to be buying at the high of the day. And it's okay to short, but getting stopped out at the high of the day, that's never fun. That is never fun. But sometimes it happens. And it's okay. You learn from it. Trust me, you get stopped out at the low or the high of the day enough times and you'll be sick of it. And you'll go, all right, something's got to change. You're like, what am I doing wrong? I got to fix it. So that's my reasoning. That's my justification for that. Now, why bearish though? Why bearish? Well, the conditions are this and that, consolidation, I got it. But if you remember recently, we talked about the Dow and we also talked about the ETFs, and they have equal lows at 33,677.74. So what do you do with that information? Well, you got to have that on your chart so you know. So when today's price action broke down at 9:30, it came back up, and look what it came back up into. Remember that gap I just showed you? Look at this. Here's our gap from Monday and Tuesday on the ETFs. Here is Monday's close. Here is today's open. There it is. Look at that. Look at that. What's good, Willow? So some people missed that today, you know, because some people were like, oh, I'm bullish on indices or whatever. And well, at least one guy I commented and I said, you need to look at the electronic trading hours for the Dow on a 15-minute. So hopefully they looked at it. Now on the futures, you wouldn't have been able to see it unless you really zoomed out, but that's not the same lows over here. But if you didn't know, what you can do, I look at the ETF because it's easier to me. But if you don't want to do that, for whatever reason, because people are going to do what they're going to do. If you click on the settings, you can go to the session and click regular trading hours. Okay. And then there's those lows there. Here. And then that same gap, just like the ETFs. Monday's close is there. Today's open is there. See that? Beautiful equal lows. What's one of the trading rules? You don't long when there's equal lows. Why not? Look at today. Look at today. Prime example. Prime example. So some people are probably going to view that video and it might not make sense. You know, oh, I see long opportunities when there's equal lows. That's fine. That's totally fine. And I put that in the video too. But then you look at today. And had you recognized the equal lows, you wouldn't have taken a long position. And guess what? When the market takes a shit like this and you're not long, well, you're not getting your face ripped off. So guess what? Here's a simple logic for you. You ready for this? If there's equal lows and we're not going to long, well, if we're not going to long, what are we going to do? If we're not going to long, what are we going to do? Distribute, come back, rebalance price, and short that market. And again, that would have put you near the high of the day for shorts. It's a simple logic. It's a simple logic. And people miss easy shit. And, you know, look, let me talk to you for a minute. And I'm going to preface this by saying, look, because I got to get egotistical for a minute, but I want to tell you this, okay? I do not claim to be the greatest trader. I don't claim to be the greatest analyst or anything like that, okay? You know, I'm not the best trader, all right? So there's that. However, I do enjoy looking at other people's analysis because of the things that they miss, right? Because a lot of people overlook shit. I know how it is to be like a beginner learner. You don't really know what you're looking for. And when you do know what you're looking for, 9 times out of 10, you're going to overlook something. I try not to do that. So if Twitter is bullish, I'm automatically thinking I'm probably going to be bearish, but I need to justify, you know, that idea. So if people are long, okay, you're going to long, that's cool. But let me take a quick look. Am I going to long with equal lows? No. No. Now, sometimes are people going to be bullish and then the market goes up? Okay, fine. That's great. Nothing to fade there. But with what I just outlined for you, how we diverged this morning, Dow was the only one who traded higher on that small time frame at 9 o'clock. That's not a bullish market. It gave up a new high super quick. That was the only one to trade higher. It's manipulation. We have a high probability downside target. So are we looking for longs? Absolutely not. So, you know, morally, will that sit right with some people? It may or may not. But the truth of the matter is most people don't know what they're doing. So if all of the noobs or if all of the people who really don't know what they're doing, if they all agree, chances are it's probably just something that's a herd mentality. And I want to fade that almost every single time. So how do you get, you know, to this type of point? Every day, man. Every day. We've been looking at charts, at least here on YouTube, 4 times a week the last 3 months, maybe almost 4 months now. What? Because at first I didn't have the schedule. I was like 2 days a week and then I bumped it to 4. But for those of you that have been watching on a consistent basis, I almost guarantee that you've learned a lot since then, and it's only been a couple months because we go into detail, right? A lot of the times we're able to outline ideas prior to them happening, but I give you explanations as to why, not just here's the price level and fuck off. It's here's the price level, but here's why we should get there. You know what I mean? Appreciate that, Willow. So on the way lower, you know, what are targets on the daily? Well, 41.10 and a quarter was April 13th low. The next available low would be April 6th. This might be asking for a lot, but 40.80, there's a small gap there too. But I don't know if the market is going to be able to get there. It could, but I don't know. So at this point, since we're not in from this morning, or at least I'm not, then it's better to just sit out the rest of the day, in my opinion. I wouldn't want to try and catch the low today. The emphasis has been on the downside. So I feel like a lot of people are trying to pray for the market to come back if they're in drawdown. Like if they're long and they didn't trade with a stop, their face is gone. Gone. No face. Okay. And they're probably praying for the market to come back. And I don't think it will. You know what I mean? At least not until 40.96 is taken, because that's going to be the higher time frame liquidity here. So, I mean, it could trade higher, of course, but I think the market is in a hurry to get there. So we're down like 40 points roughly on the S&P. And I wouldn't want to try and long this market today. You know, sometimes when big moves happen, the thought shouldn't be, how can I capitalize? That is a good thought to have, and sometimes you still can, but on days like today, it's better to just not do it. Just come back tomorrow. Let the market do its thing. You don't need to be a part of it. Go read a book or something. And I know I've been saying that a lot recently too, but it's true. If you try to come in here and press buttons, trying to force something, it's almost never going to work for you. Then you're going to get pissed off, and that's how you start revenge trading, or that's how you start getting on losing streaks. If you're not part of today's down movement, then just don't fucking worry about it. Just move on. And that's hard for some people, but I try to explain this to you, man. I try to explain it. You know, I've had students before where I'm like, look, I'm bullish AF. Don't short the market. And then they'll go in there and short. And they'll get fucked up. And then they'll complain to me about it. And I'm just like, I don't get that. Now, I'm not always right. Okay, I'm not always right. But it's like, if I have a really strong bias and I'm telling you, and you purposely go against that, why? Why do that? That will work less times than it will not. You know what I mean? So, you know, you are in control of your account at the end of the day. Okay, you control whether you're going to enter or exit the market. You're going to choose whether you want to stay out or not. You know, I can't do anything except give you a idea of what I think. Bullish, bearish, or slop, or don't do anything. And right now, since we're on a stream, you know, this is live analysis. So as of this moment, 1:28 Central Time PM, I'm not doing anything with this market today. Today's opportunity has come and gone. That was that gap. Okay, so that's all she wrote. That is all she wrote. Not looking for anything else. So, any questions? You guys have any questions? Did y'all journal today? or are y'all gonna do that later? What's going on with that? For those of you that don't know, let me see. The Daily Stoic by Ryan Holiday and I think it's Stephen Hanselman. Yeah, Stephen Hanselman. Okay, this is a really good book. You can read a page every single day. And I did like today's one. He talked about materialistic things. Yep. I think, what's today, the 25th? Oh, maybe I read the wrong one. Or maybe I thought about the wrong one. Or the day before. I don't know. Anyway, April 25th, there's nothing wrong with being wrong. So I wonder what that sounds like. Wonder if we have any trading rules about that. There's nothing wrong with being wrong. Basically being coachable at all times. What was the one I was referring to then? I don't know. Well, anyway, so yeah, make sure you guys journal today. Don't skip out on that. Don't skip it. Andreas is gonna do it later. Have fun at the gym. Learning to move and walk away led to many breakthroughs for me. Spitting facts. Appreciate that, Willow. So yeah, I mean, today would be a really good day to shut it off from here and go like Allie to the gym or outside. You know, I have a different stream here in like 30 minutes, so I am probably going to do something very similar as well. Just so you guys know, I did release a video earlier today. I'll show you that real quick. It's only like 3 minutes long. It was a screen recording of yesterday. It's called Stop Living Aimlessly. I was out walking outside and decided to let you guys in on what I was thinking about. And that's what walks are good for. So go watch it. It's only 3 minutes. Came out 2 hours ago. And that'll be that. So I'll probably do more videos like that as well. Like screen recording the Instagram stories and stuff like that. So it'll be centralized in one place. And that'll be it. So, yep, we will go ahead and practice discipline by walking away and not doing anything. So I'll go ahead and cut the stream here. We'll keep it a short one today, 30 minutes, maybe 33 minutes. All right, so thanks, guys. Y'all be blessed. We'll be here tomorrow. Okay, same time, same place, and then we'll be here again on Friday at 1 p.m. EST. Oh, that's right, tomorrow, guys, put an alert on the low risk, high reward intraday setups. That comes out tomorrow at 12 a.m. Central. I think that's noon. I think. Wait, it says 10 hours. It comes out in 10 hours? Well, fuck. Either way, low risk, high reward setups, intraday setups, excuse me. That video comes out, I guess, in 10 hours. Maybe I flopped the time, but that'll be out soon. So make sure you hit the notification on so that way you don't miss it when it comes out later. And then that'll be it. What's your question? Thins, what's your question? And then we'll shut it down. See you tomorrow, Willow. Yeah, we'll have time for one question. What is it? Lay it on me. And I might read some Henry David Thoreau. God, the text is ridiculous. I might have to grab a magnifying glass, dude. That's crazy. This one's better. Ralph Waldo Emerson. Today I struggled with limit orders in JPYs and gold. Today I didn't trust the limits. What part of that is your question? What part of that is your question? Lewis is long on NU. Well, the dollar is rallying today, I think. The dollar is rallying. Dollar's strong right now. New Zealand dollar, it looks weak. I mean, I haven't really done like a full analysis on it, but I mean, we're into this gap, so maybe. I wouldn't be long though for me. I'm not longing New Zealand. I mean, it's under these lows. I would wait for a better reaction though. But it's your trade, man. You do what you got to do with it. Missed my limits, missed my best entry, and got no re-entries. Yeah, if there's no re-entries, you just sit out. You just sit out. You don't try and force it. Now, we could go into a long, complicated discussion about order flow and stuff like that, but if you don't get in and the market just takes off, then just don't worry about it and come back another time. Practice patience, man. Practice patience. You don't have to trade every day. Okay? So y'all be good. I will see y'all in the next stream.